We've got Dinesh Agrawal. He's the founder and CEO IndiaMart with us live. Good to have you on board. Thank you so much for joining in. Your collection growth for the core business has been accelerating. Can you just walk us through what the outlook is on your collections going forward?
So collection growth has two parts now because last year in April we acquired Busy Infotech accounting software company, and that has a collection of its own of about 45 to 50 crore rupees. So while you see the overall collection growth to be about 30%, I think for the standalone business of IndiaMart it has been at 25%, and we are happy to have a 25% collection growth upwards from the range of 20% that we used to have earlier. So we are happy on that. One of the main reasons that you can point out towards it is the increased number of customers. Earlier, we used to add about 5,000 customers per quarter. Now we are adding about 8,000 customers per quarter, which is adding to increased number of customers, as well as because of the older customers who are upgrading their plans to more gold and platinum subscription. So there is an ARPU growth also, and that both the things put together is increase driving the collection growth to the 25%.
That the cash collections will continue to be high by around 25% growth. We have seen the addition is going to be 8 to 9,000 per quarter, and that's the reason ARPU is likely to trend higher as well. But what will it do to your margins? Because at least in the quarter gone by, they slowed a tad bit to around 25-26%. When do we expect them to go towards that 30% mark?
So by the end of the year, we are targeting this margin to go towards 30% mark. Because quarter four is always a little bit stressed, where we get a lot more higher collection, and there is thereby a lot more incentives and everything is upfront paid out, and that is why you see lower margins in quarter four seasonally also. Having said that, in the last 18 months or so, we have added about 1,000 people into the organization in sales and service and product and technology. And that has brought down our margin to some extent. But we are still better than the pre-COVID levels. Pre-COVID levels, we used to be less than 25% margin or 26% margin. We have been doing consistently better than pre-COVID. And now I think we will start to inch towards 30% mark.
All right, inching towards the 30% mark. Can you just walk us through the outlook as well in terms of the numbers for traffic? Because that looks a little bit flat. Are there challenges that you're facing for suppliers if the traffic does not improve?
So not recently, because the traffic, if you see pre-COVID level versus now, the traffic is up by 33%. And during this whole last 3 years, every year the traffic contributors were very, very different. The first year traffic contributors were safety items and food items. The second year in the COVID wave, the traffic contributors were medicines and a lot more hospital related stuff, oxygen and things like that. Those things have died down while the other natural business has picked up. So while you see in the last through 2.5 years that the traffic is stagnant, but the constituents of the traffic have changed. We have done away with the seasonal or with the pandemic-led traffic, and now all of the traffic is business traffic. So effectively, this traffic is good for company. Going forward, I think for a year or so, if this traffic remains at this level, I'll be more than happy. And then onwards, I think the traffic should start to increase, maybe in FY25 or so.
So the traffic is likely to increase, but the quality of the traffic and the consequence is improving. I also wanted to come back to the point that you made in the first answer where you said that the ARPU is likely to improve from here on. How will it increase? By what margin? Because I don't think you've taken price hike at least in the last 3 to 4 months, right?
Yeah, on the platinum side, I think we have made some small rejigs, but I think it is largely driven by the more upsell as of now from silver to gold and gold to platinum. Because the people who have seen us through during the 2 COVID waves, they have developed a lot more confidence, and we have also got a better product market fit by working on category by category during this whole pandemic period. I think our AI/ML algorithm is also working better in terms of matchmaking, and that is resulting into people upgrading into higher packages. In terms of the prices, we did give a slightly discount uh, during the COVID period, and I think we are slowly and slowly withdrawing those discounts rather than increasing the price. So I think that may also be resulting into some price ARPU gains.
Okay, Dinesh, on that note, we'll let you go. Thank you so much for joining us and talking about your earnings and the trajectory going forward. You also have the M&M sales data at the bottom of the screen.